There is a major threat to Australian investors' portfolios. It's real, and it's one that we're not likely to forget in a hurry. Nothing is certain, and regular viewers know that I don't grandstand, I don't make predictions, I just work with probabilities, and I'm pretty habitually bullish. Glass half full. Money flows dictate most of my investing decisions. And this is a unique event where the risks just can't be ignored. Unfortunately, Australia is ground zero for an energy threat that most would find inconceivable for a country of our stature. So this analysis is not about solutions to Australia's dire position. That's for governments to fix, helped along by hopefully very strong community encouragement. This is about recognising that what we've got is not a simple quick fix. There's a lot of headlines around at the moment about what the government is doing, but they're all just quick fixes. This situation is going to keep recurring unless there is a dramatic change to the way that this country is run. Therefore, investors really must take heed that their investing process has to change. There's just no question about it for them to prosper. It's about understanding and working with probabilities, because that's all that smart investors have got. No one can know the outcome next week, next year, or in the next decade. All we've got is probabilities, and so you've got to make the most of that. Now, I started this conversation in the regular weekend video last Monday, and as promised, I'm going to go deeper into that subject and where we find ourselves, and what specific sectors and stocks will get punished, really punished, if this situation is not coped with, or not just coped with, but actually rectified. Now, that's probably going to take at least 5 years if we got on with it today, but I suspect that that's probably not going to happen either. So this is not about assigning blame to anyone, but to inform investors, which is what I've been trying to do in this Sunday video for 17 years. Inform investors how to best protect themselves in the coming years and to thrive, to do well, because you can. Opportunities will remain, they're just moving, they're just shifting. So you can't be blind to the fact that there are terrific opportunities. It's just there is less of them, and some of them are different to what we understood 12 months ago. So as I did last Monday, this will be a balanced view, because the last thing that investors need right now is some false alarmism or a biased assessment of what's going on. Equally, this is not a time to panic and respond with the typical investor's emotional actions, but rather just to calmly adjust your exposures and your weightings in particular to suit what you need, what you want. So it's about higher probability positioning with our eyes open and our minds open as well. So it's vital for investors to recognise that most of what is evident from this war, which is going into its 6th week, is already priced into the market. Now, whether it's priced in correctly or not is another question, but the market is forward-looking. It's always seeking to price in the future. So a lot of it is already priced in. So if you're trying to zig and zag on a daily basis with what is a headline-driven daily fluctuations in global markets, it's just a complete waste of time, and it's going to produce worse outcomes. You'll become disillusioned, and you'll certainly become less wealthy. We've been doing this for a long time. We've been through many cycles, and we've observed how difficult it is to make massive changes, to sell everything, and then with the intention of coming back in. It's incredibly difficult to do. So a better way forward is to reduce exposure to the stocks and the sectors that are at risk, and to rotate that money into what are largely immune parts of the market, and there are some. And that's according to both fundamentals and technicals. Now, as regular viewers would know, I'm predominantly technically driven, but when you get a combination of the fundamentals are right, they're aligned, and the technicals are validating that, then you're in a much stronger position. So for those of you that aren't regulars with this video, my name's Gary Davis. I'm an authorised representative of Primary Securities, and the information in this video is of a general nature only. So let's unpack a little bit why Australia is so vulnerable, because this event, this Iran war, has really uncovered or displayed for everyone to see just how vulnerable we are. And everyone was ignoring it, from governments all the way down to individual investors. So the real staggering thing here that you've really got to stop and shake your head at when you think about it is that we're an energy exporter, but we import the bulk of our liquid fuels. And this has happened because we used to have 8 refineries, now we've got 2. And we only produce 20% of our liquid fuel needs. What an incredibly dangerous position to be in, to be beholden to other countries to supply us. And we took the easy way out over a number of decades. Both state and federal governments of all persuasions, they just botched it badly, pursuing the green dream, doing things that just didn't make sense because they were more politically acceptable. And that follows on decades of similar unrealistic thinking that had no recognition of sovereign capability. Auto manufacturing, we've basically lost our entire automotive manufacturing capability and skills that go with it. So these are industries you can't just switch back on again. Textiles progressively left the country over multiple decades. Electronics has done something similar. Heavy industrial components, ditto. And the net result is that we've got this dependence on global supply chains for just about everything. And the opening graphic showed supply chains breaking, and we're seeing it in real time. It's happened almost overnight. The war's only been going 6 weeks, and we're in a dire strait within a couple of weeks. That shows you just how vulnerable we are. So where we sit now is not just about solving the immediate problem. It's about rectifying our ability to survive in this new, much more aggressive world. So the reality is, and this is, as I said at the start, I'm trying to be as balanced as I possibly can here, and the ultimate objective is how it impacts investors. But I've got to paint the picture so that everybody understands the situation where we really find ourselves. So the reality is that our economy won't run without foreign fuel. I think that's absolutely undeniable. And, running over to Asia, as the Prime Minister is currently doing, hopefully not on his knees, but essentially begging for extra cargoes of liquid fuel. Well, that's all well and good, but Asia gets an enormous amount of their crude oil from the Middle East. So if they're not getting enough crude oil to produce for their own domestic market needs, how secure are these extra cargoes? And it's not the current Prime Minister's fault. There's a whole long line of governments that are responsible for this. So the long-term consequences are absolutely dire unless we rebuild sovereign capability in so many areas. So don't be fooled by the headlines you're seeing at the moment. All the politicians yapping about the solutions, they're just band-aids. They're just-in-time measures. You can't run a modern society on just-in-time measures when you've given away most of your sovereign capability. And as one example, energy-intensive heavy industry, we've lost the domestic capability to produce. They include high-temperature processes, chemical feedstocks that are just so critical to the way our life runs. We require a continuous energy supply, and as much as many people would hope, renewable energy is just not it. It can't produce continuous energy supply 24/7. I'll have a bit more to say on that shortly. So if our dependence on overseas supply chains continues, then I think it's pretty undeniable that there is going to be a significant inflation and cost of living boost. And it's going to go across food, transport, construction, everything we build. We're also in a crisis where we don't have enough accommodation for the people that are here, yet the cost of building materials is going to go up, is going up. And all of the manufacturing inputs. So this is going to impact just about everything. And then if you look at national security, there is already talk. Last week, the government was saying diesel rationing is not necessary. The rhetoric changed within a couple of days, and they're now saying, well, we might have to, or something to that effect. It's just within a couple of days, they've been forced to change their tune. So what is it that they are seeing that they're not telling us about? So diesel rationing is now in the narrative. What about our military readiness? What about in 5 years' time if we find ourselves in an Indo-Pacific war with no diesel to fuel our ships and submarines? I mean, that's completely unacceptable. This morning I read several articles about mining companies calling out the fact that diesel cost was a significant impost, and for some of them, that increase was double. But for others, they were also warning that they may not be able to continue operations at the current level. And then, of course, we've got freight shutdowns as well. So there's a real national security issue. And I don't know about you, but I don't want to be in a position where geopolitical events dictate our domestic economic outcomes. I mean, that is just absolute stupidity for a first world country. But that is where we find ourselves. And anyone that denies that is just not looking hard enough at the facts. Industrial shutdowns is not on the agenda at the moment, but it's possible. Morgan Stanley on Bloomberg on the 16th and 17th of March said that if there were to be a 26% drop in diesel imports, then shutdowns of Australian manufacturing and industry would happen. Now, I don't know where we are at the moment. I haven't been able to find numbers that tell us how much our diesel import is down, but it's not a difficult thing to see that our diesel imports could drop by a quarter. Maybe they already have. We're just not being told about it yet. All right, now let's keep things as positive as possible. Let's look at what the renewable energy transition could possibly do for us. So to what degree could that make a difference? So the renewable energy build-out is progressing. It's behind schedule. And that's a bit of a worrying indicator, because if you're behind schedule in the early years, then, it gets progressively harder and harder as you go along to get that incremental benefit. So putting that aside, the renewable energy build-out is progressing, but there is also plenty of resistance, and there is increasing resistance in some areas that you maybe wouldn't have expected, particularly from some green parts of the community, because they're observing all of the damage that's being done to the environment. So destroying the environment to save the planet, I'm not sure that makes a whole lot of sense to me. But anyway, I don't want to get into that. That's not the purpose of this video, but it's just an observation. Everything we do in life is a balance. Now, there are a few countries that didn't buy into this whole change to 85% renewables or whatever the target is. And setting targets is kind of stupid on something like this, because you've got no idea of all the potholes that occur along the way. But other countries, particularly in Europe, they've been forced to pivot back to restart uranium reactors or to restart some coal operations as part of electricity generation. So it's a bit of a mystery to me why we can't see what is happening overseas, that perhaps the rate of energy transition we're trying to achieve is just not feasible. It's not possible. Now, a little while ago, the government made a big song and dance about us becoming a green hydrogen superpower. So let's see where we are with that hydrogen industry, because if we were to become a green hydrogen superpower, then that would go a long way to filling some of the energy gap that we've got. But let's see what has happened in the last couple of years. This is just a small sample that I was able to put together very quickly. So there's the Stanmore project in Gladstone's been cancelled. Origin Energy in the Hunter Valley was cancelled. FMG with Andrew Forrest running around the world as the green energy champion. FMG would have been one of the last companies I would have expected to walk away from green hydrogen. Well, they've scaled them back or they've mothballed them. That must have been an agonisingly tough decision. South Australian government had plans for Whyalla. That's been cancelled. Japanese company Kansai Electric walked away from projects they were involved in. A UK company in Townsville, that project's been cancelled. And the Queensland government Central Hub project, the funding has been withdrawn. So there's got to be a point where you step back and acknowledge that green hydrogen is just not commercially ready. And not only are we not making progress on green hydrogen, you could argue that we're actually going backwards, significantly backwards. So if green hydrogen ever does become commercially viable, it is going to be a long time before we reach that point. So that is not the answer on its own. Let's look quickly at what can be decarbonised, because we all want to move along this track if we can without kneecapping ourselves. So electricity forms about 25% of our total energy demand. So it's obviously critical, and potentially, and this is with the rosiest coloured glasses on that you could find, potentially 95% of our electricity could be generated from renewables. We're currently at 35%, I think is roughly the right number. So that raises the question, what's it going to cost to get from where we are now at 35% to 95%? What will it cost in dollars? What will it cost the environment? And what will it cost to our way of life to get there? I don't know the answers to that. But again, I'm just, I'm painting the picture. I'm not being critical here. I'm trying to paint the picture so that investors understand that we've got to do something different about our investing if we want to prosper. If we look at transport, light vehicles, the potential to maybe make 80% conversion from petrol combustion engines to EVs. Heavy vehicles, I believe 50% might be possible. This is all just potential. It's not to say that we'd ever get there. Aviation, short-haul flights, maybe 30% is a comment I picked up from the industry. The creation of a sustainable jet fuel industry in Australia, but where's the technology to scale it? My understanding is that technology to scale it doesn't yet exist, or it hasn't been proven. So there are lots of things that can be decarbonised. Shipping, potentially 50% using things like ammonia and methanol. But the problem is the global fleet turnover is quite slow. So the chance or the time for that natural turnover of shipping fleet is going to take quite a bit of time. If we look at industrial heat and manufacture, it depends very much on the particular industry, with potential anywhere from 10% to 100%. Petrochemicals, plastics, fertilisers, absolutely critical for our way of life. Not much, 0 to 20%. So for those that are calling for the complete phasing out of fossil fuels, you've just got to get real about what actually goes into the manufacture of our essential products. So overall, to eliminate fossil fuels by 2050, the amount of renewable energy required would be 8 times what we currently have, and that's according to this report in the Sustainability Journal. So is that realistic? And are we prepared to pay the price to generate 8 times as much electricity from renewables? Food for thought. Let's look at the stocks and sectors to win and to lose. So hopefully I've now got your minds open to the fact that investing really needs to change, and it needs to change significantly. But it also varies very significantly whether you're investing in Australia or you're investing elsewhere, particularly in America. So let's look at who's at risk. And these are companies that you do not want to have, or areas that you do not want to have significant exposure to. Agriculture. Without diesel and fertiliser, then just forget it. Crops don't get planted, irrigation can't be driven, they can't harvest, they can't transport. So that's it, shut up shop. So there is a significant risk there. To what degree that will happen, I don't know, and I'm not saying, but it's a risk. And the way that I approach investing is I try to eliminate risk. I don't want to own industries that have got the potential to be heavily disrupted. And you can't say that our agriculture industry does not have the potential to be significantly disrupted. Mining and mining services, which affects haul trucks, excavators, remote site power generation. And, there's a variation here. It depends whether you're an open pit operation or an underground mine, how far you've got to haul things, all that sort of stuff. And whilst availability is obviously the ultimate stumbling block, some companies have hedged their diesel exposure and other companies haven't. So there is a great variation there. You need to know the mining stocks and the mining services stocks that you own, where do they sit in this? What's going to happen to their costs? And it's going to happen whether the war ends today or not. And just before I started recording this video, there was an announcement of a 2-week ceasefire. But looking at the 10 points that Iran has put forward, I just can't see America agreeing to any of them, frankly. If we look at freight and logistics, covering trucking, diesel locomotives for rail, aviation for freight, any companies that touch these areas are potentially at risk. Now, I'm not saying that you sell everything that's in these areas. That's not the message at all. But you certainly don't want to have a high exposure. And of course, this ultimately filters through to what's on our supermarket shelves, medical supply chains, things that are pretty damn important, like food and pharmaceuticals. If we look at aviation and tourism, domestic travel would be affected. FIFO, fly-in, fly-out workers with mining operations, and also tourism-dependent regions. Manufacturing and petrochemical industries, so our feedstock dependence is high, and transportation obviously comes into it there. And the manufacturing that's still left in this country, food processing, chemicals, building materials, all of it is at risk. So importantly for investors, who's immune? Well, qualified defence stocks, and I say qualified because there are some defence stocks that have got a great early stage technology, but it's not commercially proven. So defence stocks that are qualified should be largely immune. And we're looking for stocks that have got rich commercialisation. So they're selling stuff, they've got established relationships, and particularly with defence, you need to have relationships with the military. And without that, not a lot happens. And that's not something you create overnight. It takes years and years to develop those relationships. But there are opportunities in that area. Gold royalty companies that I talked about a few weeks ago in the weekend video. But you've also got to understand it's not just buying any old gold royalty stock. You've got to understand what makes the best ones the best. Because there are certain factors, and they're about people. Critical minerals, very difficult at the moment to look within Australia because all of our mining industry now has a bit of a cloud over it. Now, we've got obviously a spread of critical minerals, but the only ones that I'm kind of looking a bit more confidently at are the ones that are located in North America. The actual project itself is in North America. When we get to US listed stocks, the size of the pond is much bigger. And you want to stay with the 7 megatrends because there's just no need to go outside of it. So why would you go to a sector that doesn't have this howling tailwind for the next 2 decades? I just don't understand why you would do that when you've got sufficient. So for me, there are 2 opportunity buckets. One is quality stocks that are immune from what is going on at the moment with fuel and geopolitics. And they're effectively immune now. So there are buying opportunities right now. And some of them have become significantly cheaper. And then there are others where still a little bit of a question mark. Let's see how it plays out. But they've gone through a really deep correction, like US software stocks. Now, that's for a different reason. It's not for the Middle East conflict. It's because of fears over AI and whether they will destroy business models. But in some cases, that's not going to happen. The strong will get stronger. But what's happened is very good businesses have gone through a deep correction. So there is terrific opportunities in America. Let's look at the road ahead, which is hopefully not out. There's some vital perspectives that I really encourage investors to think about. We can't know how long this conflict in the Middle East will last, how it will play out, what will be the end point when it ultimately reaches some kind of equilibrium. So there's no point even trying. I mean, it's just completely unproductive to even think about it. So this is not a message to sell everything, because that will leave you worse off. I can absolutely promise that. What it is a call to reweight your portfolio towards stocks that are more immune or almost completely immune. Reduce your exposure to stocks in Australia that have that exposure, that risk. Whether it plays out or not doesn't really matter. We can't know at this point. But what is a prudent step is to reduce exposure to that area, reduce the weighting, and increase your weighting. So recycle that money back into stocks and sectors that are immune. And the difficult thing about where we find ourselves is that this is a real moving feast here. The longer it runs, then the more stocks there will be to avoid, because the impacts will be greater. And also, they will shift. The stocks that we shouldn't be in will become larger. The stocks that we can be in and still do okay will become smaller. So this is not a static situation. Really, really difficult for the typical investor to handle. And what you need to perform really well is very heavy immersion in the markets to be able to just cope with the speed of change. I mean, when I think of the number of things that have changed from midday yesterday to midday today, it's quite mind-boggling in terms of impact on investors and the way that we should think. Now, Insiders Club members have been here many, many times since before 2008, and then all of the events since 2008 through COVID and through Trump tariffs and et cetera, et cetera. We've done this before, over and over. We know how to play it, and members know how to play it for their specific needs. And what we do is we prepare early. Every time we prepare early, quickly, within a few days, maybe a week or two at the most. Prepare early for what comes next, no matter what that is. So that's a matter of just, again, coming back to probabilities. If you try to formulate outcomes that you want to have confidence in, forget it. You can't do it. And this is as bad a situation to try and do it as you're ever going to find. So it's a matter of preparing no matter what the outcome is, and that can be done. What to watch out for from here? Now, we're currently at stage 2, according to the Department of Climate Change and Energy, whatever the rest of that is, I can't recall. But we're at stage 2, where supply is still strong and secure. But with the speed that things are changing, you couldn't possibly put your hand on your heart and say, we will not progress to stage 3 or to stage 4, which is pretty serious stuff. The immediate problem is the cost of liquid fuels. It's not exhaustion, but that's our immediate problem. And maybe that will remain our immediate problem for months to come if the Prime Minister is successful in getting extra cargoes. But I put it to you, is that really how you want to invest? Do you want to invest on the hope that the politicians can pull it off? I know I don't. Distribution seems to be more the issue than total fuel supply at the moment, and particularly into the regions. And I am a little disturbed by the mining companies just in the last 24, 48 hours that are now pointing to the fact that they could have a supply problem. And you wouldn't expect the mining companies to be saying that unless they thought it was realistic. Also, look out for, are we having to increase the number of long-haul emergency cargoes? We're far from a static, stable situation at the moment. All of the impacts through the supply chain have by no means been felt yet. So what happens over the next couple of months? Will Asian suppliers put restrictions on exports because they just can't get the crude oil out of the Middle East to process? And obviously watching the status of the Straits of Hormuz, and supposedly there is a 2-week opening of the Straits. So obviously watching very critically what happens there. How long it lasts, who's got the flexibility, what companies have got the flexibility to cope with it? And in Australia, that's not many percentage-wise, because the absence of liquid fuels just touches almost everything. So what needs to be done? Well, we need greenfield oil exploration if we want to get back our sovereign security, our sovereign capability. And anything short of that is just playing with fire. We need expanded refining capacities. We've gone from 8 down to 2. We've got to go back up again. We've got to build more refineries. We also need large commercial coal and gas to liquids industries. And that technology exists. You've just got to have the political will to build it. Now, it's not a quick fix by any stretch of the imagination, but we can make the decision that we don't have to be a vulnerable country anymore. And I don't know what we can do, how we can do it, but if enough people stand up and make a noise about it, then politicians have to take notice. There will be emergency measures. There are emergency measures to get through the current crisis, and they could get a lot worse. If after this 2-week ceasefire, no agreement is reached, then we're back to where we were. And you've got to remember that there's a staggering amount of infrastructure, oil, gas, petrochemical, in the Middle East has been destroyed. So that's going to take quite a while to re-establish. So the actions that are required for the country's benefit, we need a transition timeline, transition to a lower fossil fuel use. We need a timeline that's realistic. And currently the one that we've got is just crazy. It can't happen. So let's set a timeline that's more realistic. And we need to rebuild sovereign capability. It's absolutely critical. For the investors' benefit, the best spin that I can put on this for Australian investors investing in Australia is that we are vulnerable. Many of our industries are vulnerable. The vast majority of our industries are vulnerable. And there is a credible earnings risk. Now, don't take that as an alarmist comment. It's an undeniable fact. There is credible earnings risk. And if it's going to eventuate, then just the fact that we don't see it right away, it's going to take a while to work through the system. So the question I pose for all investors is this the risk profile that you want to invest in by just allowing yourself to do what is normally done, and that's be broadly exposed, diversified across the economy? And I would shout loudly that that's just a really, really dumb way to go about it, because we're just too vulnerable now. So in Australia, if you're an Australian investor, I think if you're buying anything, you really need to look at, is this company immune from where we find ourselves at the moment with all the supply chain risk? And there are some. If you're an Australian investor investing in the US, then your degrees of freedom in terms of investing are far, far more. So just use the natural ebb and flow of the megatrends to advantage. Software in America is a great example. The whole sector's been smashed. And the best stocks have been thrown out with the trash as well. They are creating tremendous opportunities. So there's still plenty to be bullish about. In fact, I'm as bullish now as I ever have been. But my field of vision is now narrowed. I've got a smaller pond. The pond in Australia that we're fishing in has shrunk until we have certainty or higher probability about how this will play out. Now, from our perspective, specialist share education, we work hands-on with our members who are independent investors. So that's one avenue. The other avenue is for those who want to have a more hands-off approach. Then we do a managed account style of service as well. So I'm bullish. There are opportunities in markets if your mind's open and you know how to look for them. And if you want more information or you want to speak with me directly, then there's my email address. And I will be back with you on Sunday, and I'm sure a lot would have transpired in that time. Cheers.